All right. Good afternoon, everybody. What's up, guys? How's it hanging? I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Look at that. Pretty clean position disclosure there. 9 positions, less than 10 positions. It's been a long time, I think, since I had less than 10 positions on. And I cleaned out all my short exposure that I put on today into the close. I just want to take a step back and reassess. It was an interesting day. I don't know. I traded some things really, really well today, and I traded some things rather poorly today. And hold on. Why is this stock popping? 46, 56, 66. Sorry, I got something on the move here for some reason. I just gotta make sure I'm doing this right. Okay. Okay, I'll take the little extra money. I'll take the little extra money. I'm not upset by it. Yeah. So SPYs closed up 0.25%. Qs closed down 0.15%. The IWM closed up a whopping 2.7%. I mean, this Russell move the last couple of days has just been insane. Thank you. This Russell move has been absolutely insane. This is exactly what I've been looking for. I've been looking for, as the TLT moves higher, as interest rates come down, for the IWM, for small caps, for mid caps to outperform. I know Pat is nervous because everyone keeps saying on TV that they're looking for small caps and mid caps to outperform. I would say I've been saying it since the end of October, and I didn't get that in November really, but we are getting it here in fits and spurts throughout the month of December, and it just makes logical sense, I think, for them to play some catch up on that gigantic spread between the Qs and the IWM. Thanks, Josh. I don't know. Today was set up to be a really tricky day. That Fed pivot, if you want to call it that, which to some degree the market was sniffing out and was already pricing in, just created a massive move yesterday, and then we gapped up further this morning. And it's like, on the one hand, you're kind of approaching some real oversold extension readings again in this market. $10 of extension in the SPYs and the Qs yesterday, and then pretty much again today at highs. The IWM is even beyond that. Usually I say the IWM at $7 of extension is where it gets extreme. We had $10.50 of extension in the IWM and highs. I don't know if I've seen that in recent memory, at least. $10 of extension to the upside in the IWM. That's real big. That's real big. So, what do you do? It's like, it just made for a very tricky setup, I thought, because in theory, I after this point, a day six gap up with $10 of extension in the SPYs, Qs, and IWM means that I want to build into some shorts. And I did that. And I did that pretty successfully, honestly, with UPRO and with TQQQ. I traded those really well. I traded Coinbase really well today to the short side, even though I didn't get any follow-through on Coin to the short side, but I just, kind of intraday traded it pretty well within its range and put a few bucks in my pocket that was pretty decent. The flip side was that I traded Snap very poorly, and I traded Tesla especially poorly. I traded a boatload of volume today. I traded a little less than double what my probably average volume is today. I traded a boatload of volume, and I got so caught up in managing the positions that I was in this morning, when I was in so many things and everything was moving hectically, and I was trying to manage those positions, that I really let that Tesla short get away from me, and that's what I'm really upset with myself about. just the way that I am, I'm pretty hard on myself on trading mistakes. I kind of expect perfection from myself at this point. So it's like I could have a lot of other things I did really, really, really well today, and I did do some things very well today. I traded, again, the spies and the Qs really well. I traded Uvixi incredibly well. I traded, which I also closed out into the close. I traded Chewy like really incredibly well. And I traded this Tesla absolutely terribly. And the main reason for that, and this is no excuse, was that I just had so much going on that as the position was running away from me, I was like, you know what? I'm up a ton of P&L, whatever. I think that this market should pull back anyway, so I think the market will be on my side. So whatever, I'll just let this Tesla run against me. And that just was not the game plan. That was not the game plan. And I'm especially annoyed because when I was, I'll turn on the YouTube video for anyone that's watching on YouTube. I'm especially annoyed because when I was coming to work today, to the office today, I specifically told myself on the way to work today that I wasn't going to really trade Tesla. I even kind of remember thinking to myself, like, what would you tell a new trader about Tesla today if they traded it yesterday? Because this is like a common issue that I see especially newer traders have, and it's usually not an issue that I let myself have, but it definitely happened to some degree today. Yesterday I traded Tesla incredibly well to the short side on a great trade through that 234 support zone. I was extremely greedy with it. So I ended up not making like a ton of P&L with it. I gave back a lot of open P&L from my highs, but that's what my game plan said to do yesterday, so I'm not upset about it at all. I was actually really happy with how I traded Tesla yesterday. So yeah, I gave back a lot of open P&L, but I did exactly what my game plan said to do. I was going for a real big winner on that, and you know what? The only reason why that trade was not a massive winner was because the Fed came out and just ripped the entire market higher and caused a failed breakdown technically in Tesla. So then we even discussed it briefly in yesterday's afternoon meeting where it's like, all right, now Tesla's back in the midpoint of its range. So on the one hand, you have a failed breakdown in Tesla, which a lot of times can make a move to the other side. But on the other hand, you still have a lot of relative weakness in Tesla. I think it only finished positive about 0.9% yesterday, which if you compare that to most growth tech stocks or even a lot of the big cap tech stocks, that was very relatively weak. It was relatively weak to the Qs. It was relatively weak to ARK. So everything was saying, don't trade this stock today. And I remember, kind of even telling myself on the way to the office this morning, like, a common mistake I see traders make, especially newer traders, is that they trade a name really well yesterday, so then therefore they feel the need to trade it and probably trade it even bigger the next day. But the setup isn't there the next day. The setup was there yesterday. You need to trade it yesterday when the setup is there. And even worse than that, which I didn't do this, but I also see new traders do this sometimes, is they miss an opportunity yesterday that they researched, and that opportunity works really well. So then they trade that stock today because they missed the opportunity yesterday, almost feeling like the stock owes them or they need to make money in it because they didn't trade it yesterday, or they're going to make up for the fact that they didn't trade it yesterday by trading it today, when the setup just isn't there. The setup was there yesterday. The setup was there yesterday. You need to take it yesterday. And again, in that case, I did, and I traded really well. So I had no business being in it. And then, pre-market, I saw the market downtick maybe on that economic number real quick or whatever, and there was like a little bit of like potential like pre-market support breakdown trade in Tesla. So I said, you know what, I'm just gonna take this little like kind of quick little day trade here, which will be basically a dollar worth of risk. And if I get stopped out, whatever, I'll just give back a percentage of the P&L that I made yesterday. Not even what I was up at high. It's just a percentage of the P&L that I actually made yesterday. And what honestly ended up happening was when the market opened, Tesla ripped so hard, so fast against me, and I was managing so many positions at once that I just couldn't get over to it. I couldn't get over to it to assess it, to stop myself out, to get the stop loss in, to, do anything to it. And then at that point, I think I was planning on getting out at 242. By the time I actually typed it up, it was probably $2 even past that. And then I'm like looking at it like, oh man, like now it's past my stop loss. What do I do? And another thing that I always recommend traders to not do is make game plans on the fly. Make your game plan before you're in the trade and then follow it. That's what breeds consistency. But now it's like, oh, I'm a couple dollars against, it's a couple bucks against where I was planning on getting myself stopped out. Like, what am I gonna do here? You know what? I'm up a ton of P&L and everything else, literally everything else. So I'm just gonna add more to the short side, and like then I kind of stopped watching it again, and the thing just continued to rip and rip and rip and rip against me. I did end up salvaging myself with a couple decent trades throughout the day at some of these pivot highs, like at this pivot high into 250, which actually Aaron M called out really well. He said in this first test to 250, I think this could be a short. And then Pat was eyeing this thing at the absolute high of the day, which also turned into it also turned into a pretty good short there. So I was able to salvage a lot of P&L to the point where at the low on this pullback, I was like getting sort of close to even being flat on the name. But it's it's not enough, and I'm not trading to be flat. I'm trading to make money. But again, the whole thing was just completely out the window. And with the amount of size I had, when this thing then bounced again off that 247 area to close back up at 251, certainly didn't close at my worst P&L in Tesla on the day, but I'm definitely not happy with the number when I look over at it. And then I get in my own head also, and I get really upset at myself because it's like I look at my P&L today, which is a pretty respectable number, and I'm like, oh man, if you didn't take that additional 5-figure loss in Tesla today, imagine what the actual P&L would have been if you just traded everything smart. And I just didn't do that. So I don't know. It was just a terrible job. Totally flubbed this. Told myself I wasn't going to trade it when I was even coming to the office today because I knew the setup wasn't there, and I don't trade things when the setup isn't there. I don't feel a need to trade things when I don't feel I have an advantage. Did not feel I had an advantage on that daily chart with this, and and then I compounded my mistakes by just letting it get away from me. Again, at the same time, I guess to try to make myself feel better, I did trade some other things really, really well today. I traded the indices short really well today. I traded UVixie really well today. I traded Chewy really well today. But I was so annoyed at myself at the end of the day with this Tesla when I was trying to figure out, do you want to keep some UPro short? Because I could have, where UPro closed, I easily, it would have been well within my game plan to keep a small position. I thought about keeping some Snap, which is another one that I didn't, and this is another thing to make matters even worse. I traded Snap poorly because I was trading Tesla poorly, which is just like a stupid thing. And I was like, I got a little bit of an upside tail here in this Snap with this massive amount of extension. Like, I could keep this short as well. I kind of like the idea of actually keeping this short overnight, and I can still manage the position. But I was just so kind of frustrated with myself into the end of the day that I said, you know what, like, why don't just give myself a hard reset. I liquidated a lot more long stock into the up move today. I got all out of that RXRX, which is a Kathy name. I got out of Pfizer early on in the day. I got into and out of Google today. Size down just into the up move and Alibaba and JD and Chevron and Tilray and Chewy and Penn. So I'm like, you know what? Let me just close out all these shorts into the close, including UVixie, including Snap, including Tesla, including UPro. Would have no business at all keeping Tesla short overnight. Snap, I could have if I wanted to. UPro, I could have if I wanted to. Those would have been fine. And I could have kept that UVixie also, but I just think the way this thing trades, that if the move is really going to be there, it'll let me in. I still think there's something a little sniffy. Sniffy, is that a word? I'm sniffing out something with this VIX trade right now, just with the way that it's been trading over the course of the past couple of days. But what I've been saying about the VIX from the beginning is, and I know Bill K, if he's listening, was kind of giggling at me a little bit, like calling the bottom of this compressed volatility environment by buying UVIXY is absurd, because I mean it's just such a garbage product. Also, I wish there was a better product to try to be long volatility on than this thing, because it's not like you can be a little bit off on your timing and have the thing create a base and then have that base break out, which that happens to me sometimes with stocks when I'm going long. Like, oh, my timing's a little bit off, but it's building out a base. I'm fine with that. I can work the ranges within the base. I can be prepared to size up on the breakout or whatever. You can do that with stocks. You can't really do that with this UVIXY ETF, just with the way that it decays. So I could have kept that also versus today's lows. It didn't close on lows, but I just said, you know what? Let me reset. So got out of all the shorts. I'm sized down pretty significantly now on the longs. I'm going home very light tonight. Very light. I'm going home the lightest I've been. This is probably the lightest that I've been since like last July at this point. I don't remember exactly where I was back then, but in this June July period before I started shorting, there was a point where I got yeah, Bill, I appreciate it. I'm going home like probably as light as I had back in July before I started shorting, which happened somewhere in there. So I'm really light, and that always kind of feels good. It feels good once in a while to go home really light and reassess, just because this market's in an insane spot, and I'm having trouble right now kind of justifying where I want to be and how I want to be fully positioned in the market, or at least I was today. It's like I've been bullish for a while. It's paid me really well over the course of the last month and a half or so here to be on the bull side of the market. It's been a great move for me. I've made some solid P&L to round out what was also otherwise a good year. I still am bullish on this market, kind of in the short to intermediate time frame at a minimum here. I understand what Brant Hirsch is saying, if he's still here, about he doesn't really see how this market can possibly move down over the course of the next couple of months with the Fed positioning the way that it is. But at the same time, things like extension are really important to me and really important to my approach. And we're in a day 6 gap up with $10 of extension and $10 of extension in the IWM. It's just a great time, I think, to take a half step back and let the market reset up. And if the market resets up via a price correction, which is kind of what I was looking for today just off of extension, but logically it doesn't make sense to me that just the day after that Fed move yesterday we're going to sell down as hard as we did, which is also why I was even saying in the morning meeting, like, the day after a Fed day is often a trend day, but I kind of didn't think that was going to happen today, because I thought it would be very difficult for us to trend up, just given all the different metrics of extension that we're talking about. But I was like, how are we going to possibly trend down after the Fed yesterday? So it's a tough market right now, I think, for like the very immediate term on how I want to kind of be positioned here. What I really want is to let things reset up. And if the market resets up via price correction and I miss it because I don't have that short on in Tesla, Snap, and UPRO, and the UVIXY trade on, it's fine. I'm not going to get hurt by that. It just means that I won't make money from the trade either. But if it's hard money, I don't need it. And that's kind of been the theme that I've been trying to go after here for the last couple of months, because I think that we all, to some degree as traders, have a fascination with that hard money. You wanting to short the things that are up too much, that have given the big move, that are extended to the upside. And we've just been talking about it to death recently because there's been so many situations that we have found ourselves in like that over the course of the last couple months. And it's just been such hard trading. It's such hard trading. Like even the things that I traded really well today to the short side, I don't think that they were like easy. I just think that I had good game plans and I executed the game plans really well. So that's kind of where I'm at. I want this market to reset up. I'm going home super, super light. I'm not saying that I'm not going to try to reshort tomorrow. I'm not saying that I might not, try to rebuy that UVIXI tomorrow because I'm sniffing something. I'm sniffing something. I'll be a little bit annoyed if the market gaps down and UVIXI gaps up tomorrow, which could easily happen after this doji day without me and I don't have the positions on, because then I'm going to be in a very awkward spot on how I want to reposition myself for tomorrow. But I think I think if that happens, I think if we gap down tomorrow and I don't have any of these shorts on, I think I'm going to try to do nothing tomorrow. Maybe I'll trade something that's in play that could trade independently to the market. But if we were to gap down tomorrow and I have no shorts, I don't think it's necessarily a good spot to start buying. It depends how big the gap is, obviously. So I'll just create a game plan for myself. It'll be a Friday. I'll do very little. That's after doing a lot today. Tomorrow I can do very little, potentially, and then reassess early next week after we get through options expiration. If we get a flat to up open, then maybe I'll use it as an opportunity to reestablish some shorts. I will especially short a gap up tomorrow in the indices and just kind of reinitiate the game plans that I had today that were so successful, if it seems appropriate. So I don't know. It's kind of where I'm at. You take the good with the bad, I guess. I am happy to answer any questions that you guys may have. So Chewy had an insider buy here after hours. Their director bought 15,000 shares worth of stock. Dave S, aka UVIXI Bull, giving us our NASDAQ IWM update on that pairs trade. It's working pretty well. We're kind of breaking the downtrend. That downtrend there that of outperformance in the NASDAQ to the IWM is breaking pretty much as of today's candle. Good stuff. We got Costco out. Costco looks sloppy here after hours. Special dividend declared of $15 per share. Question from Cody. Any advice on trading in this new bull market? I began trading towards the end of 21. So all I've ever seen was a super volatile bear market. You never saw that insane squeeze market that we had. I mean, that the bear market was in some ways the result of a bubble that we had to work through. Does your macro game plan change once we make new all-time highs and start to establish a healthy trend of higher highs and higher lows, assuming we don't just go parabolic forever? Yeah, for sure. Knowing your market environment and adjusting your strategies to the market environment is always key. Are we in a range-bound environment? We've spent a lot of time in range-bound environments. When the market's looking the best for continuation, that's usually when it fails. When the market's looking the worst, or like it might break down, that's usually when it gets brought back up. That changes when you're in an uptrending market. When you're in an uptrending market, it's, buying breakouts has a much higher probability of success. Buying breakouts really they come back into vogue. I remember, late May, June, July, even this, smaller upcycle that we had that lasted for that 2.5 months, buying breakouts in that period of time was great. You can also look to, buy the lower highs. And the way that we like to do that is when the stocks pull back into equilibrium, we look for pivot signals, and we buy on the way up after the pivot signal, like the hammer low or the inside and up. But then the other thing I would say is that when you have a very clear trending market, swing trades will tend to pay you much better also. If you're in a range bound environment, you'll find that when you are, having a good day trade, let's say to the long side, and then you keep it overnight, a lot of the times you end up giving back the P&L of that swing trade. When you go into an uptrending market, that trend can just sometimes continue and continue and continue. There's definitely been certain years, 2013 comes to mind, 2019 comes to mind, where the market just continues to go up. You also want to pay attention to, within that trend, kind of what the volatility profile is of the market. Like I remember, I think it was 2019, where we didn't get a pullback in the market the entire year that was more than 2.5%, which is just insane if you consider what we've gone through over the course of the last 2 years now. But in that environment, honestly, day trading was not good at all. You had to be swing trading and keeping the positions overnight and letting them just continue to pay you and pay you and pay you. So even within any bull market, not all bull markets will be kind of treated equally. But as a general rule, when buying the dips comes into play, that's when buying breakouts comes into play. That's when swing trading gets a little bit easier and more profitable. So we'll see. I'm not fully convinced. I know that we have had this insane rip higher here. I'm not fully convinced that we are totally ready to establish a new real bull market, uptrending market that is, more similar to, this environment in here, starting from the I don't want to say the COVID lows, because the first part of the rally of the COVID lows was also like extremely volatile. I would say probably starting like November 2020. Obviously some stocks were in complete bubbles, but the market itself, the SPYs themselves, were in this, kind of beautiful uptrend that lasted from, let's call it November 2020 to September 2021. So like a full year there of just clean trending higher. There were certain patterns that we had established in there where there were these consistent mid-month sell-offs that were getting bought back up. Other market environment. Here's your 2019 trend that was a monster. Here's your 2017 trend that was a monster. And you can get these uptrending markets that sometimes just last for like a year plus. I'm not fully convinced that we're out of this, which, in some ways that go into a weekly chart now, you could certainly make an argument that we've just been in this insane kind of range bound this weekly recently. Wow. We've kind of just been in this insane, more or less really big picture range bound market that makes sense logically, right? Because this market's been a balance of inflation and Fed tightening and recession fears and everything else, where, what's created the range, I guess, from a more macro perspective is there's always been some reason for there to be enough selling to hold the market down from kind of broader continuation. I'm not fully certain that we're out of that. The first move from the Fed as they go into, a period that the market is viewing as loosening can certainly be bullish. But it's not necessarily the case. If you look back historically, I don't think that loosening periods while the market is doing that are always bullish, even if it's that way at the actual pivot. I still have concerns, like, the market is obviously super excited here about the Fed projections on inflation working their way down to 2% and these maintenance cuts. But keep in mind that those cuts are just maintenance cuts, right? They are just kind of based on the real rate, so where interest rates are versus where inflation is. So inflation coming down means that they can cut a little bit and stay at the same place. So staying at the same place doesn't necessarily mean loose monetary policy. It really actually still does mean, in some ways, higher for longer. It's just an adjustment on what higher for longer actually looks like. So you're getting this insane bull rush that's coming into the market right now, which is caused by that news, but it's also caused by feedback cycles, because markets work in feedback cycles. So there's been a lot of flow that's been coming in. And right now, I don't see a reason for that to stop happening, especially when you've got, usually strong seasonality into the end of December and in the first like week or two of January. But at a certain point, the market will have this degree of cuts, which again, I struggle to call it loosening, because we're still, for the moment at least, reducing the balance sheet from the Fed, and these are not really loosening cuts; they're maintenance cuts, right? So you still do have the possibility of this negatively impacting the economy at a certain point, which we're not seeing at all in the data really yet. I don't think. Maybe a little bit of a slowdown, but it's a slowdown within a very healthy jobs market. So as long as you've still got people working, it's hard to have like a real bad recession. And I would still make an argument that we actually had a recession in 2022. That everyone was, where's the recession? I can't believe we didn't have a recession. We had a little recession. We had 2 declining quarters in a row of GDP in 2022. That was a soft landing. It was so soft that, for I think basically political reasons, they didn't actually call it a recession. It was a recession. It annoys me that it's not going to go down in the history books as a recession. We had a recession alongside with the bear market of 2022, but there is a chance that we could get some sort of, dare I say, double dip recession. If anyone was trading in 2010, you heard the term double dip a million times. Dare I say we could get some sort of double dip mild recession. I don't necessarily think that that's going to be a huge recession unless we really see the jobs market deteriorate. And if that happens, then the Fed actually will do real cuts or stop reducing the balance sheet. But I think that kind of push and pull of us still being in a higher for longer environment, despite Powell actually coming off as dovish as he did, could lead to early 2024 not being as euphoric as market participants seem to be starting to get here in mid-December. Which by no means means that like I'm ready to start heavily shorting today and be big picture about it. Even though that was true what I was doing today to some degree. So I think I answered your question, but what I'm harping on now, I guess, is the premise of the question on if we are actually in a new bull market. And I know, all right, we're up, 20% from lows or whatever, so that means that technically you're in a bull market, but when I'm looking at the big picture here that goes back the last couple of years, even if new all-time highs come in, which easily could happen, I'm not fully convinced yet that we are breaking into a cycle that is similar to the cycles that I just highlighted from previous years, where you get that nice steady flowing uptrend that lasts for a year plus. I'm not sold on it yet, and that's as someone who has been very bullish. But I was bullish on a short to intermediate time frame. I really haven't been bullish on a big time frame. I'm concerned once we get a little bit deeper into 2024 on what the economic outlook is going to look like. And again, there's no evidence on that. It's pretty far away still. So I'll obviously take things, one step at a time. But my game plan in my head, and the market just moved faster than I expected it to be, has basically been since the beginning of November that I want to have these long positions on, and as the market moves up, I want to lighten up and lighten up and lighten up and lighten up, so that by the time I hit a point of mid-January, I can be assessing this market from a positioning where I am very light. And that one of the issues that I'm actually struggling with a little bit is I'm just about as light as I planned on being a month from now, right now. And that's just because this move has been so big. There's still some room for me to sell some of these longs that I have into this up move for sure. I would love to get, and we got a little bit of it today. At this point, honestly, the best thing that could happen for my P&L would be some China catch up, because I've got this BABA position, I've got this JD position. As I'm looking at my positions here, they're my first and second heaviest positions right now, after today, Alibaba and JD, and Chevron is kind of up there also. And Chevron in some ways, to some degree, is also a little bit of a China play. So it's like when I'm really thinking about that, I don't really have. I've got like very little exposure right now to the broader market. But then that leads to the question of what am I going to do over the course of the next month? Go on vacation? I don't know. Do I want to be heavily shorting in a market when I still feel bullish on it right now, just because of extension? The answer is no. I could take little trades on that, but I'm not. I don't think it's time yet. I still think that maybe there's a chance that though this leads to a market where that UVIXY actually can go up even as the market's going up. So I want to keep an eye on that, even though I liquidated the position into the close. The price action almost felt that way at points yesterday and today, like it was starting to set up for it as I was watching the intraday price action really closely. But I mean, it just circles back to what I was saying in the beginning of the meeting. It's just a really tricky environment right now, and trying to figure out exactly how you want to be positioned after such a massive move is difficult. And you know, I'm not ready yet to be big picture short, even if I think that the VIX could begin to at least hold in. At the same time, it's like, how aggressive do I want to be to the long side on like a small dip? Like I was saying just before, if we price correct back down, at least as of tonight, if it starts via gap down tomorrow, I'm not going to have the shorts on it to capitalize, but I'm not going to get hurt because of how light I am to the long side now and how much I've taken off. But if that happens, if all of a sudden we have had a dip, like by mid next week, let's say, which is definitely possible between options expiration tomorrow and then the effects of options expiration on the market into early next week, we could definitely price correct down over the course of the next few days, by mid next week. And then the question is, what does my buying look like into that dip at that point? I got to figure that out. Big rant off your question, Cody, but it was a great question, and hope my answer was able to help. From Eddie Webb, one of my problems as a relative newbie early on was having too many positions open and trying to manage them. Listening to your frustration with too many positions, do you have a rule for a number of positions? Obviously, you and others in here know what they're doing and can handle more open positions. But after today, would you give yourself a max number of open positions? Just hearing you today gave me anxiety. Just wondering. Yeah, sorry about that. And I also feel like I was neglecting the VTF a little bit at the open because I couldn't even manage all the positions that I was in, let alone fully follow what was happening in the VTF at certain points today. So definitely apologize for that. When I was a new trader, I had a rule that I did not allow myself to be in more than 3 positions at a time. Once I found myself in more than 3 positions at a time, I felt that I didn't just feel, I saw, and the data I was keeping showed it, that I was making mistakes and I wasn't able to manage them properly. So, yeah, there was a period of time when I was a new trader where I had a 3 position maximum limit. For, I don't remember how long it lasted, but it definitely lasted for a period of time. I don't have a limit now. This is sometimes at the open when I have a lot of positions on, I'm like really rapidly pressing the buttons and managing those positions as orders are getting filled. And sometimes at the open, I find that I will sometimes get a little bit behind on certain things, but not to a degree where it's a problem, and I play catch up really, really quickly. Today, honestly, was the first time that I felt the way that I described about not really being able to keep up with my positions in as long as I can. I can't remember the last time that happened, actually. So I don't have a rule with that. And I have found, I guess I would say generally, so while I don't have a rule with it, I think anecdotally I have found that I can be in 20 up to 25 positions at a time and manage them properly without really too many issues. I'm curious, what was I in at the most? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It sounds like I was only in like 20 positions at one time today. Thanks, Rich. I was in 20 positions at one time today, but I think that it was the kind of the way that they were moving, and that there were shorts and there were longs, and the way I trade the T-Triple-Q and the U-Pro, it's with like a lot of rapid execution. At the same time, Chewy was having a news event, so that thing was moving like the way Chewy moved today was so insane. And I was very focused on this thing, which is great because I traded it awesome. I liquidated my position. I hit the bid to liquidate my position at 22.22. I was like, you know what? I'm looking for a little bit more. Like, my target was like 22.75 on this thing, and the move was just so big, so fast, and I didn't really believe in it. And I know that this 21 area has been such big resistance. I thought that they might hit it down off of this extension, despite the news that was happening. And this shooting star was starting to like kind of come in. It seemed like it was struggling. I was watching it really closely to be able to continue, and I wasn't trusting the market at that point anymore either. I was like, you know what, Bam, I'm just whacking out of this of the remainder of my position, and I'm gonna reassess. And then I did end up buying stock back into this insane down move where I was trading it just like, I'll show you my execution dots. I'm trading this thing like this at the same time as I'm trading the T-Triple-Q like that, and I'm trading this U-Pro like that. I mean, it was just, Palantir's giving me a lot of executions, and Tesla, I'm all over the place on how I'm trading that thing. Yeah, it was a lot. So yeah, thanks. I hope that helps, Eddie. You Vixie Bull, aka Dave S, on plug. Thoughts on plug for tomorrow for longer term swing, gap fill from earnings a few weeks ago. Didn't this thing basically say that there was didn't this thing say in November that there was concern that they would not be able to be a going concern? Didn't they basically come out and say that there was a real chance of bankruptcy for this stock? That scares me. Sure, it's getting into. When that happened, I said I was done. I did pretty well with plug at a certain point on the way up. I think back in here, I traded plug and I made money in it, and I stayed away from it in its entire down move. And then when they had that earnings report, and they basically said that we don't know if we're going to be able to avoid bankruptcy at a certain point in the future, I was like, okay, I'm done with this stock, probably forever. It's always been a bad. This thing's been around forever. I remember seeing squeezes in plug, back in like 2014. This thing's been around forever, and it's always been a nutty stock. I don't know. I don't have a strong opinion for you. It looks great if it gets into the gap technically, but I'm afraid of the stock after that announcement, so I'd stay away. What's Lennar doing after hours? Down. Oh yeah, nice and down. There goes that opportunity. Brandon N saying, I took a trade on plug a few days ago looking for a swing long. I went long at the 390s using the 1128 breakout high. 1128 breakout high. Consolidation of about 380. I see. Was my stop. Had a hard stop at 379. Hit yesterday. Immediate reversed. And now exactly how I planned. What's anything I should have done differently? No, I don't think you should have done anything differently. You had a game plan. You had a stop loss. Your stop loss was valid. You followed it. You got pushed out. It sounds like you weren't the only person that happened to. I remember, I think Big Z said it happened to him in Carvana yesterday. He got pushed out right before the event happened. I think that happened to a few traders in a few positions. And then, the reason why all these ripped is because of the Fed announcement. And there's no way you could have known that Fed announcement ahead of time. So the right thing to do is stop yourself out of your positions if they're getting your stop loss. Yeah, those are 5-minute charts. Well, they were 5-minute charts, if that's what you're asking about. Whew, I'm tired. Ooh, I got a bunch of questions here in the YouTube, so let's take a look at that. Michael B. is asking me if I can have a look at MVST. MVST, what is this? Microvast Holdings. I've heard of it. I don't remember what it is. I've heard of it. I don't know if I've ever traded it. Cheap stock. I usually stay away from these dollar ones, but let me see what you have to say. I'm swinging it from $1.17 as my average price. I did a lot of research. There's growth potential here. Okay, it's good to know. Think you might like it for your swing portfolio heading into next year. Okay, thanks for the information. I can take a look at it. And then used to trade with us. What I've taught has helped a lot over the years. You've gotten smoked in the past, but you worked, saved, and you're back at it. Awesome. Awesome. I'm glad that you're making a lot of progress there, Michael. Keep it up. And I'm glad you're tuning in. From Mike Axon. You probably were overwhelmed totally, plus don't be in a lot of tickers, just trade a few. And it's not my approach. You know, my sweet spot really is being in 10 to 25 symbols at a time. That's it. It's what maximizes my P&L generally. Usually it's not like this where I've got all the shorts and all the longs at the same time, and initiating a lot of new positions kind of aggressively at the same time. But my sweet spot really, I have found actually now, is that like 10, maybe 10 to 20, 10 to 25 positions at a time. It tends to be where I do best, kind of managing a portfolio of positions that hopefully have maybe some degree of diversity to them, but also very actively trading around that portfolio for cash flow. Yes, David, it is. Back to Mike. I took Tesla shares today after I sold SoFi calls with 300% that I bought them right at the closing price at $17 per contract. My point is Tesla has the most superior AI and robots on the market. Someone shared this with me who connected with the company and technologies. Yeah, SoFi I'm in. SoFi I'm in. I like. Tesla's very controversial on that technology. There's definitely some things I can highlight that are very bullish on Tesla. There's definitely some things I could highlight that are not so bullish on Tesla. And I think that the volatility of the stock itself represents those differences. It's always interesting. You had, I think it was Bernstein, come out and say that I think it was Bernstein come out and said that Tesla is their short pick of the year, or their pick of the year, but it was to the short side. They're looking for 40% downside. I wouldn't be surprised if we end up seeing that Tesla's someone else's bull pick of the year. That tends to be how the stock just is. And you've got people who are very, 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 very pro in the cult of Tesla, and you have other people who are also extraordinarily against Tesla. I've always personally found that the stock is just expensive. is really what it's come down to. And I guess the question is, do they have the ability to grow into that pricing that they trade for? And that's it. That's it. So yeah, we'll see. But sick 2-day move in Tesla. All right, I think I got through everything. Dollar Q, you can go back and look at the YouTube if you want to take a look at that. I don't like showing my executions too often, but I just will show them every once in a while to give an idea a little bit of some of the things I'm doing. But the idea is that you guys have to have your own game plans on everything. So build out the game plan that's appropriate for you, for your trading and for your account size and for where you're at. So, all right, on that note, I'm going to end the meeting. Shout out to everyone who joined me on YouTube. Make sure you press that thumbs up button. I just did it, but I'm the first person, so somebody else should do it. And appreciate everybody who is on the team here on the virtual trading floor. Have a great night. I'll see you all tomorrow.